Ernest Ray back at you with a stock market update. I'm attempting to close out the market with you guys live. Make sure the stream is right. So right now we got the market selling off pretty good. We got the S&P 500 futures are down about 1.5%. We got the Nasdaq futures down about 2.5%. The Dow futures were green. They rolled over, down about 0.5%, and we got the Russell futures down almost 1.5%. Now, I got a chart up of the VIX futures or the volatility futures, excuse me, same difference. And I'm watching it get ready to take this out right here. So if we get this pop right here, you say, what does that mean? For me, if it breaks and takes this high out going into the close, then I'm automatically thinking that we're going to continue to go higher on the VIX. And if we go higher on the VIX, then that means that the overall market would continue to sell off. At least that's what I'm betting on. Let's see. Maybe the SPX is just going to fill this gap right here. We already are outside of the expected move for the week. Now we'll talk about some positions that I had on. Now earlier, if you seen the video earlier this week, I had a trade on in gold. That trade actually took itself out. It hit the trigger and took itself out. Gold so open gap down, sold down some, and my take profit was hit. So closed out on that. Now you may see another trade on here currently that's open that is down, and that's IWM. I sold a put in IWM as I saw the sell-off occurring. Let's go take a look at IWM and see where we at. We right here, right? And I'm gonna show you why. You may say, why, if the market is selling off, why would you step in front of it? Well, so I'm just remaining consistent. I am oversold. We are oversold on the stochastic. We are oversold on the RSI. So if you look over here, you may not be able to see it if you're looking on your phone, but basically both are green, meaning these are buying opportunities or opportunities to buy the dip. Excuse me, however you choose to do that. And I try to remain consistent. So I'm buying low, right? We are far away from the 9-day. All I need is a pop and vol to contract. Vol is continuing to expand. So I am down a little bit. Now we'll go and look and see where I'm only out 22 days. Currently, when I first sold it, I was outside of one standard deviation when I sold this put. And you can see how far it has come in. Now, currently, even with it coming in, the expected move on the Tasty Trade platform, I'm still outside of that. Now, what am I thinking about doing now? To be honest with you, I'm thinking about selling some junk. Coming out here one standard deviation and maybe selling some junk out here, right? Because I'm not gonna have to pay any more buying power. Basically, it's not gonna cost me anything else to take in some more credit on the other side and collect some more theta. Because right now, the position that I have on, we'll clear that out. It's just a bullish position, and it's showing that I have about 9.5 theta, uh, and it's a basically this was the equivalent of owning 19 shares of IWM. Now, if I was to come in and sell the other side, banking on us getting a pop tomorrow, uh, by Friday, I would just come out here and do this. If we're gonna get that. Well, we'll see. Let's see. I'm gonna continue to watch. You can see the market is continuing to sell off. Just but basically, since I came on to what it was at right around the Russell futures was right around 1.5%. So that's the only thing that I would do, if anything, and that would just turn this into a strangle, basically, and I'd just be on the other side. And you might ask, why would I come out so far? I'm expecting the market to rally. I really am. We look at this on an hourly on the intraday. So you can see right here, It's now oversold on the stochastic on the hourly, and it's getting ready to get there on the RSI. So generally, when you get that, you get pullbacks into this area or something like that. So I'm just remaining consistent. So let's go ahead and let's put that on while the market is doing that. I'm gonna come out here. We're gonna come out. I'm gonna come way outside. I'm gonna come maybe what we'll call it. If we sell the what 227. One outside of one standard deviation. Mhm. Uh, I'm just trying to see what that'll put my if I'm already short here, and this is the 20 delta. If I come here, this is what 28. That'll put me 28 total deltas. Should total probability of profit should be somewhere right around 72%, something like that, right? I'm just trying to see how much more credit I want to take in. And we got the market close. I'm gonna go ahead and sell this one. We'll come out one standard deviation. The rally could be vicious back up to the other side, though. That's the only thing about that. I'm selling this right here. More than likely, I'm banking on a pullback maybe tomorrow, unless this continues to go down. But we'll see. We'll come out here. Let's do what would that put me on the chart? I want to look at it. So up here above this area was what 226. This would be 227 right here. If we had like a furious rally, if I sold like a 5 delta, we sell let's go outside one standard deviation. Let's sell this one right here. Let's penny it up. See if we can get filled right here. So I put it in at 71-cent credit. Let's see. We'll take this one off. Let's cancel that. All that was a take profit for the short put, which obviously we're not getting that. Let's go here. Look like the market they look like they're taking some vol out. As you can see, these options are, I want to get filled. I penny down to 67. There we go. Got filled. So now basically what I have on is a strangle. I kind of legged into it instead of putting it all on at once, but that's a strangle. So you can see I'm here and I'm here going into the close. That's what let's look on the analysis tab and we'll show you what it looks like here. Let's see. Why it ain't showing the green? No pair trade. Let's go back to the curve view. It's actually, this should be green. And it's probably not showing that because I legged into it. But I sold this one. And then I had sold this one earlier. So everything in between here is profit. But because I legged into it, it's not showing it. It should be showing it right here. I'm gonna have to, what I end up doing, guys, is probably there we go. It's probably because I didn't have this on. But here you go. Right here. So you see right here from here is the profit area, my profit zone. And I want the market to stay in between here. Let me see if it updated my probability of profit. So you can see my pop is 70%. And that's what I was calculating basically in my head when I was picking out which call to sell. So all it did was take my probability of profit of this one and then my probability of profit of this one. And you can see I got a 70% probability of profit. And more than likely, the probability of getting 50% of this is probably around 84, 85, maybe even more than that. And then tomorrow, you should see these two merge together and it should show us like one trade. If I would have done it as one trade, it would have looked like a strangle like this. Lock it here. Now, this would be your strangle. And you see the green right there. So it's showing you my profit zone. Profit zone all the way up here on the call side and all the way down here on the put side. Now, generally, I don't like to be 22 days. I like to be like right around 45 days. But I intended for this to be a short-term trade. We will see what this looks like tomorrow when the market opens. So tune in. I'm probably gonna go live with the opening bell tomorrow. But all in all, I talked about on my video earlier this week, I talked about gold. We got the sell-off in gold. Now I would like to see, to be honest with you, I think gold got a little bit further to go. I don't want to jump in here on a down day and sell. Like I don't want to short into the hole. I'd like to see gold pull back some and then I could get short. We even got to pull back on bonds. Let's look. Let's not a whole lot though. I want to see how bonds is respecting this Fibonacci level right here. I would like to see bonds come back down into here. And I'm telling you, if I get it to pull back around the 9-day moving average, I'll get long again. I'm buying all dips on bonds. The only difference is just figuring out which one I'm gonna do. Either I'm doing the notes, which is here, or /ZB is here, or even the TLT. So yeah, I could do either one of these, right? I do think that that the bonds will continue to go up this year. So that's the trade there. Everything else is down. Everything they're taking them out to the woodshed right now, getting a nice good sell off in the overall market. But I'm not buying this sell off as being real bad, right? And I'm gonna show you why. Out of all this red over here, I'm still looking over here and I see the XLF. XLF is green on the day. Those are your banks. So if the banks are still green on the day, then I'm not buying the sell off. That's one thing that I look at. That's why I have this over here on my watch list. I very rarely trade XLF. I may trade like JP Morgan or Goldman Sachs or something like that. But for the most part, I have XLF over here and XLE as ways to determine what the market is doing. And if I see that the banks aren't selling off along with the market, then I'm not completely bought in on the sell off. We got uh, you still got a lot of stocks in the S&P 500 that are green on the day, like Boeing. Even though it's showing you this red candle stick right here, it's up 75 cents on the day, right? That doesn't mean that that it looks like it could still go a little lower, but how much lower can it go, or will it go? So as long as certain stocks, like let's pull up some bank stocks before we get ready to go to the bell. Pull up JP Morgan. JP Morgan, green on the day. Let's look at Goldman Sachs. Goldman Sachs is selling off. We got Goldman Sachs selling off a little bit, but to me, this is like a orderly sell off. This isn't like where it's just like after sitting through COVID, that was a panic sell off and wasn't nothing orderly about it. That was one of those sell offs where it was like, all right, the market was in trouble. Like we was hitting circuit breakers and things like that. This ain't that. This is just, to me, this is healthy. This is healthy for the market. This is giving people opportunities to buy. I'm looking like Bitcoin. I talked about this earlier. I'm sitting right here. I won't, me. I'm looking for Bitcoin to come right back down here, right around this level right here. Let's draw this rectangle. I'm looking for Bitcoin to make its way right here. That's an opportunity for me to start building a position to buy in. Let's go. I have an alert set up to let me know when Bitcoin gets below 74,000. Excuse me. Once that happens, then I'll start going to Solana. Look at Solana. That was the closing bell. We look at Solana. Look at Solana getting killed, right? I've already started building a position in Solana. But so I'll be looking at Bitcoin, ETH, and Solana once Bitcoin hits that area. I'll be looking to add. I want to see it get down around that area, and then we can start. Let's delete this, clean some of this up. But basically, guys, we're gonna be tune in tomorrow. I'm gonna go live at the opening bell tomorrow, and we're gonna see. Hopefully, I'll be able to close this out tomorrow. Now, it did close with this joker pouring to the downside, right? Like you can see it right here. I wouldn't be surprised to wake up tomorrow and we get a gap down. I wouldn't be surprised. This is what it looks like going into the close, and it actually crossed over on the MACD going into the close. So I wouldn't be surprised to come in. What would that put us? Maybe be down right down around 208, 207. It's possible. Now, if that were to happen, where would that put my trade? That'll have me still, even if right around 208, which is my next support level, 208, 207, I'm still, far out of the money. But we'll look at the adjustments then. If it opens up like that, more than likely I'll either roll this down, pick up some credit, close out the call side. So a lot of different adjustments I could do. But we'll see if my short side gets tested. And so you can see, let's see, we're down about 55 bucks on IWM, IV rank of 38. Let's keep a mental note of that, because if volatility comes in any, there's a collapse. Let's look at those vol futures. It didn't quite get up there. It got right there to it. And it didn't quite take out this high on the volatility futures. It could do it though after hours or overnight. Let's look at the VVIX. And we got a VVIX up over 110. You see this line right here. I keep this line on here just to let me know whenever the market gets up over 110, we rocking and rolling. That's letting me know that, hey, volatility is pumped into the market, and it's time really to sell options. We've got a lot of red over here, but like I said, keep in mind XLF. XLF is still green. XLE is green. And so that's what, I'm not really worried about the sell off. I don't know why I sold off today. I seen some headings about more tariffs or this, that, and the third. Doesn't really matter to me why, but I can see that it happened, right? So with that being said, guys, make sure you tune in tomorrow. We're gonna see how what this strangle look like tomorrow morning. We'll be able to take it out for a profit, or if I need to close it for a loss, back up out of the position, roll down. We'll see. That being said, guys, hit that like button, hit the subscribe button. Um, oh, real quick. So far, before we get out, we got one more trading day in February. And this little small YouTube trading account, man, before I daggone, I was up over 700 for the for the month, for these first 2 months. And then I sold that put and IWM, and it sold off on me. But that's all right. We'll see what happens tomorrow if I can get back into the back up over 7 tomorrow. And then try to see if we can at least maybe on this count, maybe by the end of the year, if we can be up about $3,000 or $4,000. It's doable. It's doable. I know 2 is doable. Trying to stretch it. And we're just doing high probability trades, not taking super risk. Even with this strangle on IWM, it's not super risky, right? I'm really far out of the money, and I'll be able to react even if we gap down tomorrow. It would have to gap down pretty substantially for me to take any real smoke. And that's why I went on ahead and sold this call on the other side. So as the market moves down, I can also either hold this call or roll down with the market as it goes down, which they call rolling the untested side. This would be the tested side, is the put side. The market rolling, the market continues to go down and sell off. I would be taking this, buying this back, and selling something here, rolling down the untested side. So tune in tomorrow, opening bell. you get a chance to see me manage this trade or take it out for a profit. Either or. That being said, guys, I'm out. Peace.